Be the first hearing in the Bombay High Court between the Kotak Mahindra Bank and the RBI on the issue of Kotak Mahindra Bank diluting the promoter's stake. So the initial lines that we're getting in that the Bombay High Court has refused to grant a stay in the 31st December deadline, which means that it's negative for Kotak Mahindra Bank. But the next hearing is on 17th of January. So no stay, Lata. So negative, but you know, it's also gotten extended, right? So
no, the next hearing is, the deadline is not extended. The deadline stands at December 31st.
So they have to comply and bring down their stake by 31st December.
Yeah, well, let me put things in perspective. The penalty, if you do not stick to the deadline, is not a great deal. The salary of the managing director and the CEO, that is Mr. Uday Kotak himself, cannot be increased till they comply, and they cannot open new branches without the permission of the regulator. With the permission of the regulator, even that is allowed. So it's not a very big penalty or downside for the bank, but it clearly indicates that prima facie the courts always stick with the regulator. It's only when the regulator has delivered something extremely unfair that they intervene prima facie. Now, this case can still go anywhere. That's a different matter. And there is let's look at the case itself. The case, what is the case? Uday Kotak, like all bank promoters, has been told to bring down his personal stake from 40 to 30%, eventually from 30 to 20%. Now, that 30 to 20 is what he has to comply. The others, he complied because they bought ING Vysya Bank and he sold some 3% to foreign investors and stuff like that. But there are a couple of people who out there, not couple, there are a few people out there who will argue that the Reserve Bank should look at the fit and proper quality of the promoter and not how much stake. Like, why is a fit and proper promoter bad at 21% and kosher at 20%? And why is an unfit promoter kosher at any point in time? I mean, even if he's 20 or 19, if he's not fit and proper, he's not fit and proper. So the Reserve Bank, like all regulators, should continue to take a qualitative call, and these numbers perhaps need to be revisited. There are a lot of people, including people like Dr. Reddy, who have called for a national discussion on how we should think about promoters. At some point in time, there were just a handful of, 4 or 5 licenses which were given out in the 90s to HDFC, to ICICI, IDBI, UTI. All of them were themselves institutions. They were widely held. So the question of a single promoter didn't arise except in the case of Centurion Bank and Global Trust Bank. Centurion Bank merged into HDFC Bank and Global Trust Bank sank. So, we never had an experiment with a single promoter until you had Kotak and Rana Kapoor. So now we are coming to terms with it, and now there is a whole, it's on tap. So now you have a different set of rules for Bandhan and Equitas and Ujjivan. They also have to bring down their stake. So a debate, among financial sector regulators on how should we rethink is called for. But that's separate. This is a specific case where a bank has been asked to bring down. They said we have interpreted the word as paid up capital. And we are, within the law, we have brought down our share in the paid up capital. And there are several Supreme Court cases which have interpreted paid up equity as paid up capital. That is what their license rules also say. So they are following the letter of the law. But the Reserve Bank says, no, that's not the spirit of the law. The spirit of the law always was that banking institutions have to be widely held. So when a promoter sets it up, we allow him to have skin in the game for a period of time, maybe 10, 15 years. After that, it must become a widely held institution like all other banking institutions. So there are two schools of thought, and both have a lot of merit. The point now is you have violated the law as of December 31, and that's not something most banks will want to do, even if they have a very good case. So I'm sure Uday Kotak himself will be in some discomfort that up until Jan 17th, he is violating the law, though he thinks that his license clearly says paid up capital at various points. In fact, even Reserve Bank of India regulations up until, I think, May of 2013 use only paid up capital. Only then they come to shareholding. So there are two views over here. The small point is that for Kotak Mahindra Bank, it would have been a very big victory if they had got a stay. But now it clearly is a victory for the Reserve Bank, which is what I expected. Up front, I thought the regulator will be seen as right, and then only the court will delve. For the moment, the regulator is right. Prima facie, they will not rule out, and that too, one of the, RBI is first among equals. So it's not very easy to overrule a regulator, and that too prima facie. So that way this won't come as a shock. But we have guests.
Yes, we have Sandeep Parekh and HP Ranina joining in. Sandeep, round one is gone to the RBI in the RBI versus Kotak Mahindra Bank case. Your thoughts?
So I hate to say I told you so, but we had this discussion.
You didn't tell us so, yaar. You said that Kotak is right.
No, it is right, but I also said that the High Court is unlikely to interfere.
Yeah.
So
Okay.
it's it's difficult to convince the High Court in a short span of time, and even if it does get resolved, they'll listen to the merits over a long period of time. So we're looking at 2 years minimum. And I told you, that stay is unlikely in a case as complex as.
So you mean for 2 years, Mr. Kotak will have to live with the uncertainty of having violated the law, kind of?
No, let us see that once the stay goes away, then he has to comply. There's no, otherwise he'll be in violation for 2 years and he can't open branches. So I think the case is has already gone against him now. So I think they'll just have to comply. I think the letter of the law is very clear that his capital is very shoddy drafting by RBI. That's all. Because otherwise everybody would be holding 100%, right?
Yes.
There'd be no dilution required if everybody could do preference shares. So it's a really bad drafting by RBI, and they just need to correct it at least going forward. They can't just keep it and say that paid-up capital is good.
Yeah. Actually, all those circulars up until May 2013 look like shoddy drafting. Or was it May 2016? Sandeep, do stay on. HP Ranina is also with us, a corporate lawyer and a long-time member of the RBI board as well. Mr. Ranina, I assume you are aware of the details of the case. Kotak had to bring down, Uday Kotak had to bring down his stake to 20% from 30%, and he did that by issuing preference shares, which brought down his stake in the equity capital, in the paid-up capital, but not in voting shares. And he sought the court's intervention. The court has not stayed the Reserve Bank's circular or deadline. Your thoughts?
Well, my thoughts are very clear that the court is absolutely right. And the object of this whole exercise is that the equity share in the promoter stake has to be brought down. And the other amount should be given to the public. So by, Kotak Mahindra trying to circumvent this by issuing preference shares, etc., would not sell. And I don't think would hold water.
Okay.
Of course, the RBI is known for shoddy circulars that I'm aware of.
Okay. But Mr. Ranina, you've been on the board and advised the RBI. In the initial times in 2004, 2005, when the roadmap for foreign stakeholders came in, and even when the 2003 licenses were issued to the Kotak and Rana Kapoor, the RBI always said that it wants fit and proper promoters, but it did not insist on this shareholding so much. They just wanted them to qualify. Somewhere around the line, the numbers became important. Do you think a rethink is needed?
Yes, a lot of things have to be looked at again, and as been pointed out, a lot of circulars need to be looked at and properly done. I have been pointing it out to the RBI many times in the past. Sometimes they accept your suggestions, sometimes they don't.
Okay.
But these things have to be sorted out by some expert groups outside the RBI. And then only they'll be able to see, because only a lawyer can see the real difference.
No, Sandeep Parekh has been pointing out that, now Kotak is in violation of the law after December 31st. Now, does he continue to live in violation, hoping that the next hearing or the hearing after will, turn the case in his favor? Or would that be too much of a risk for a banker? You think he would comply?
I think he should comply. And of course, he will go by his legal advisor, but he should comply. And ultimately, I think this is just a waiting game. He will ultimately lose the battle. So I think it makes a lot of sense for him to comply straight away. Maybe ask for another month or so, which the RBI may possibly give. And then certainly comply with the law. I think that's the best thing he can do. And he should do that.
Okay. Sandeep, logically then this should affect the stock, no? Because there is an overhang.
Yes, it should, because now it'll be he'll have to be a fire sale even if he gets a month or two extra time. I don't think the High Court is again going to say that, okay, just 10 days back we were wrong and we're going to give a stay. So I think for the interim thing is gone already now. So now if and when they hear it, in the after several months for the next hearing, and that also won't be a final hearing, it's unlikely to give some interim relief. So which means that, there's nothing in hand, and if there's nothing in hand, that means they stand in violation on a continuous basis.
I don't know. I mean, I think, Nigel, maybe you'll be able to calculate exactly what would be 10% of the Kotak Mahindra market cap. But I think it'll be like something like 18,000 crore. I don't know. I remember it vaguely as $3 billion. But, that's a lot of money that the promoter will sit with, and he has to bring it down further, perhaps to 15%. I do not know if that's the law. A promoter sitting with that kind of money, he'll have to put it in some other. He can't put it in NBFC shares because the Reserve Bank law is that an NBFC can't do what the bank can do. And with the same promoter holding two such entities, you'll get into the same problem that the Kapoor family got into.
So 2.3 lakh crore is the total market capitalization of Kotak Mahindra Bank as of now. So 10% will be around 23,000
23,000 crore.
15% will be roughly around 35,000
So at the moment, 23,000 crore is what he will land up with, no matter who buys it. And then, of course, there was some talk of Berkshire. They have not responded to our letter. But that's a lot of money. Isn't this a kind of a funny law where the promoter sits with so much money, he can't put it in XYZ? You're leaving the promoter in a kind of you're leaving him in a lurch, aren't you, Mr. Ranina?
Sorry, I didn't get you.
No, you're leaving the promoter with more and more money, which he can't put in his own bank. He can't put in a whole host of finance companies because they would be, competition, and the Reserve Bank law clearly is that what the bank can do, a group company cannot do. He, as the promoter, cannot have another such finance company. What will you do with so much money? You're just forcing you're shutting down a lot of investment options for the promoter.
That may be so, but as I said, the main objective is that there should be wider shareholding. One should not forget that. And smaller people must take greater interest in banking corporate shares. So I think that is the ultimate objective. What the promoter does with his money is his business.
It's not the RBI's problem.
The idea is to really have a wider shareholding.
Okay. I'll tell you, Sandeep, the problem that Kotak Mahindra Bank faces. Kotak Mahindra Bank says that we are the regulated entity. Promoter is not a regulated entity. So I can't force him to sell. All I can do is that I should not violate the law, in which case I have to issue, to bring down Uday Kotak's stake from 30 to 20%. They will have to issue even more shares, probably like 50,000 crore worth of shares or 30,000 crore worth of shares. I didn't do the math. But what will they do with that much money? If they could merge or buy something, they would. And they are constantly trying. You're leaving the regulated entity also in a peculiar situation where he has to dilute and hold cash?
No, see, I think there's nothing peculiar about it. It's very simple that at the time of giving the license, this roadmap was already there. So it's not as if yesterday morning they came out with this roadmap.
That's true.
So both the company and the promoters knew this roadmap. They chose not to comply with it, and they thought that they could not do anything with this money. Then they should have not applied for the banking license. It's as simple as that. I don't think it has anything to do with compliance. The issue is they kind of suddenly, I think last few months they've started interpreting it in a manner which is literal.
Okay.
And not in line with what RBI wants it to be read as.
No, that's a fair point, because when he was coming down below 40, he did sell 3% to, I think, that Canadian pension fund, if I'm not mistaken.
So if this was the interpretation, he should have never sold any shares and always done preference only.
Fair point. But Sandeep, nevertheless, do you think that with rules like these, that on-tap license regulation has not been used at all? Does it deter future promoters?
No, so I've always found this rule to be kind of not very sensible. I think some level of fragmented shareholding we've seen. The biggest problems we've seen in the banking sector over the past 1 year have been in banks, private banks which have had fragmented shareholding. So I think RBI's concept that this is a panacea which is going to solve problems is itself, based on weak foundations. I mean, it has to be relooked at. I'm not saying it's wrong, but at the same time, it's not kind of a slam dunk panacea to all the banking problems.
I think when we went through a global global trust bank era of Ramesh Gelli era, at that time it looked like promoters have to be put on a leash and wider shareholding is the answer. Wider shareholding comes with its problems, yes, and good promoters perhaps run it better than widely held companies.
Right.
But yes, there can be a good and bad on both sides. Well, we'll wait and see what happens next and whether the next move comes from Kotak Mahindra Bank itself. Sandeep and Mr. Ranina, thank you very much for joining us.
I think we've got an analyst who tracks the stock as well, Siddharth Purohit joins us as well. Hi Siddharth, thanks so much for joining in. Well, this appears to be a bit of an overhang on the stock. What would your view be?
Yeah, I think this overhang is still not entirely over. I would say it will still continue because this verdict clearly is a signal that probably the promoter will have to anyhow dilute going ahead. And the problem here is that, the bank is well capitalized over here. And but there is a definite time frame within which now the Kotak have to kind of reduce its stake. So now the alternate, what I feel probably might come to the promoter at this stage would be to probably look forward for getting maybe a suitable candidate for merger where the dilution also happens, and also what is the business interest of the other shareholders is taken care of. So probably that seems could be come as a alternate at this moment, but probably within this small time frame it looks a little difficult.
But Siddharth, what happens to the shares? I mean, I'm sure there are a lot of big investors out there, and we heard the name of the biggest of them all wanting to buy Kotak Mahindra Bank shares. Is it a big overhang in the sense that the share price can fall? What is your own fair value of the share or likely target price?
See, I don't have a target price on it, but one thing I can say is that, Kotak Mahindra Bank has been getting a very high valuations because of two things. One of the quality of earnings that they have delivered for the last 1 decade and the quality of promoter. They have complied with most of the things, and you have not heard about any wrongdoings ever with regards to them. So there are good probably possibility of them that they can get good buyers or maybe investors waiting for them, but only when the promoter should be ready to partake with that.
Okay.
So I don't think there should be any major negative reaction to that, but obviously within the time frame that you have to now comply with it, that is the biggest issue that the
bank faces.
Bank has to face right now.
Yeah.
So in the event of any good investor coming in, probably you'll see that possibly more interest coming in going ahead. So I don't think any negative reactions to come up. But the only issue, as I'm telling, is that the limited time frame that is now available for completing the transaction.
Okay, thank you very much, Siddharth. So it's quite possible that Mr. Uday Kotak would have 23,000 crores and he would become a minor private equity himself, like Azim Premji and like Catamaran. He would be perhaps having to lead one of the big private equity investments himself.
Or if he's in violation, in any case, he's going to be in violation unless he stitches a deal in the next 15 days or so.
No, you can, if a deal is in front of you, then even if you're 7 days late or even 2 months late, how many branches will you open in 2 months?
Exactly.
It's okay. And if you show intent, I don't think the regulator will say, no, you can't open branches. After all, you can open with the regulator's permission. So if you say, I have or even if he sold 5%, for instance, by December 31, I'm sure the regulator will be convinced that he's on his way. Yes, he has not yet met the deadline. But since he has done 5, he will do the rest. And maybe if he requested a few branches by then, it's possible the regulator will not be too adamant about it.
Anyway, the penalty is not steep.
No, the penalty is only, it's expansion. Branch expansion is a penalty. But I guess if you show intent, the regulator may not be very obstinate about it.
It'll be quite interesting, just another point. I was just looking at the shareholding. So as we are saying that Uday Kotak will have to find a buyer for that 10% odd. ING, they had around 3.5% stake in the company. In the last few months, they were trying to sell some stake and they couldn't sell that full 3.5% stake. We don't know the reasons out there. So that as well is a bit of an overhang because at some point of time, ING as well, they must be having 1 or 2% that's still remaining. They as well will be coming out there to sell it. So interesting times for Kotak Mahindra Bank. The stock had moved down all the way to around 1215 and then from there it's seen a bit of a bounce. Clearly, this will be a bit of an overhang on the stock.
For the markets, Kotak Mahindra Bank is down 1.5%, which means it's recovered from its lows as well. Some statements coming in from Max India, promoter not to convert the warrants as the share price is below the conversion price. Max India will come up for you on your screen. The stock is slipped. We'll just wait by for the conversion price of the warrants to also get flashed. It would be much higher than the current market price. Mitesh Thakkar and Prakash Gaba are here with us on the show now. Prakash, afternoon. Your index trade and individual stock ideas?
Well, the target was 10,878. That's been achieved like a dot.
Okay.
Now, beyond this is 10,911. So far, still looks okay to me. So if it dips, perhaps dips a buying opportunity because the trend is still intact up and has not been compromised. Strong support in the vicinity of 10,850, 830 should be okay on Nifty. So yeah, big dips can be bought. I have two stocks and both on the long side. Our first stock is L&T Finance. That looks good to me. And I think L&T Finance can see a climb to maybe around 150 zones. Stopped below 145, but I think it's going much higher than 150. Second stock that I like is the good old Reliance. That looks good. Target on the upside 1142 to 1145 zones. Stop below 1110 and no conflict of interest here.
Okay, all right. Thanks so much for that, Prakash. Well, let's get Mitesh as well into this conversation. Mitesh, what's the trade on the Nifty?
Good afternoon, Nigel. I think the trend is clearly on the upside. We've broken above that consolidation which was there for last 2.5 days. So the idea should be to get long over here, keep a stop around 10,810 and look for 10,940, 50 as your target. Though the risk reward is not very favorable in the sense that it's about 1:1.5. You might not want to buy the entire quantity right now. If you get a 20-point dip, add on to your positions. On stock side, I have two banking names on the buy list. RBL Bank is a buy with a stop at 572 for targets of 606 and ICICI Bank is also a buy. Keep a stop at 352 half, look for targets of 370.
Any trade, Mitesh, on Kotak Mahindra Bank and your disclosures also?
Yeah, so I think one, you can assume that we'll have positions and would have recommended the stocks to our clients. And Kotak Bank, I think, see, it's not showing any much or strong trended signals. It's broken the intraday pivot levels. So I think max it can come down to about 1200 and on the upside 1270, 80 should be a range. So I think it will be in a range of about 70, 80 points if you're talking for the next 5 to 6 days.